Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. Please type in a chat box if you can hear me. My name is Josip Kasik, and my email is right here. Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. And we are not financial advisors. We are presenting the information based on what the current market condition is, and take a moment to read the disclaimer, even if you need to stop it. And here's a place where you can get in touch with me on our website. Address is right here at uh, Josip at tradeactive.com. And we are going to start by looking at the big picture. Then we're going to look at sectors. And after that, we're going to place some trades. So basically, let me bring the agenda right here for everybody to see. This is what I'm planning to do. Good morning, Jeff. Good morning, Mark. Good morning, Joe. Good morning, JP. I'm glad you're here. So the big picture is the first thing that I like to do, for a simple fact that market has been quite volatile. And as you can see, uh, the picture of the uh, S&P 500 ETF has shown that we have declined quite significantly, and that over the last 2 days we found a little bit of support and we are bouncing. Now, what I like to do is go over the monthly chart, and when I go over the monthly chart, I usually focus on what the previous bars have done in relationship to the what I like to call the February 24th low. So this right here was a February 24th low, and as you can see, this blue line of the Dow Jones Industrial Average has been broken to the downside, and obviously we are currently trading below it, and we are heading, most likely in my opinion, all the way down to this area right here, which would then wipe out entire movement of the 2021. So we're not that far away from it. In fact, if you observe right here, we have a still a little bit of space to go down there. So this is how the Dow looks, and it's not that different from the SPY. SPY doesn't look that different either. So one more time, the point that I want you to focus on, this would be the January of the 2021. And if we move this bubble right here, that's mean, or a rectangle right here, that's mean we have then taken within the first 5-6 months of the year everything that market has done going up previous year. Now that is somewhat different on NASDAQ or technology sector, and for simple reason that January of the last year has already been taken out. So we're definitely heading lower, and this is something that we should keep in mind, because after I'm done with this, I'm going to jump in the sectors and I'm going to evaluate these sectors individually. And then we're going to select the trades. So last but not the least important would be the Russell 2000. That's a way better way of measurement what everything's taking place in the terms of the market, because Dow has only 30 stocks, Nasdaq has 100, and S&P has 500. But Russell has obviously 2000. And when you're looking right here, this is January of 2021, and we have surpassed it quite a bit. So over here we have a January of the 2020, and when we look at a relationship where this thing is, knowing that the Russell or the small caps have already taken back entire movement of the 2021. The question becomes, is the Russell gonna be the first one who's gonna lead us down and negate the last 2 years movement up? And only way to figure that out is to go through the sectors. And one of the ways to go through the sectors is simply to list the sectors that are most important one. So I have here a idea of going through the manual evaluation of these major sectors, and I'm going to just put them right here, so you can be aware of it, that we have XLK, which represents the technology, then we have XLF, which is a financial, and then we have a healthcare, communication, cyclical, and industrials. And what I like to do right now, my leading rationale is to look at it. Are we creating the new low, or are we not creating the new low? So this is the logic that I'm going to apply in my evaluation now when I go through these sectors. Are we creating the new low or not creating the new low? So the way how I'm going to do that is that I'm going to pull up the four main sectors, and when this thing loads up, I'm going to observe that they are on a daily. And what I'm really now focusing on, it's very, very simple. I'm focusing only on low in relationship to the current price action. So this will be the low of the May 12th, and as of now we are slightly bouncing off. So if this is the low, then I need to consider this to be a higher low. So XLK is creating the higher low, and now the question is the same situation done with XLV? So when you look at right here XLV, and I'm going to apply the same concept, I'm going to simply draw that line from here to here. You will see it's creating the higher low. I'm moving on to the communication, which is a part of the technology, and I'm seeing that it's creating also a higher low. And I'm moving over here to the financials. I'm going to just enlarge it so it's going to be easier. We came very close to this green UFO. We bounced, and we are now trading up. So in the environment that the interest rates are going to go up, the financial sector is possibly the good choice. However, be aware of it that overall bigger trend is still down. So what I have created here, a bigger trend is up, but in terms of the low, we created the higher low. So what I want to do is simply just point out to you that there is a way to track this in a way that we create kind of manual evaluation, and I'm going to switch to auto climate and work with you with that. So we can have a higher low, or we can have a lower low. So as of now, the four that I have just looked up, XLK, technology, XLV, health sector, XLF, financial, and XLC, they are all creating the higher low. So I kind of type that in. Now, that doesn't mean I'm done with all the sectors. What I want to do next, I want to evaluate if I now change this into XLI, which is an industrial. Probably your eyes are now aware that we are creating what kind of low. I'm going to take a moment here just to sip the water and wait for you to type in the answer. Is this the higher low or it's lower low? Because over here we have a high, and when we have a lower high, and then we have a from here to here another lower high, and over here we don't know where we're going to stop when we move up, But the definition of the downtrend, when we have lows that are continuing lower and lower and lower, yes, you're right. We are creating a lower low on the XLI. So that would be industrial sector. Now I want to look at one more, which is the XLY, which represents the consumer or the cyclical. So all that I'm going to do now is change this into XLY and observe that it's pretty much the same situation. So we have highs that are getting lower, 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 and then we have this most recent low of the May 12th, and we have gone even lower. So this is a kind of confirmation that we don't have a complete synchronization in all the sectors. Some of the sectors, such as the cyclicals, which represents consumer discretionary, going lower, and we have some of them that are going higher. Now, be aware of it. What I'm doing right now, it's very much time consuming. We're about 10 minutes in the session, and I have done this sector analysis through the manual evaluation. What I'm going to do next, I'm going to actually use the sector evaluation, but it's going to be automated. Okay, it's going to be automated. And one of the tools that we have on our platform that I personally think it's amazing, and it's not being utilized the most, is a tab that says groups. So right here, I'm going to click on the groups, and when this thing loads up, I'm going to actually point out to you the way how you can do this analysis that I did manually by using the top platform. So by using the top platform, I'm going to start just simply reading from the left to the right and observe that currently we're looking at the US stock market, right? And this thing right now is just looking at the last 10 days, right? But over here, we have a section that I can click the long trend. And when I put the long trend, what you're going to end up getting under each one of these, for instance, over here, we have a consumer services. You're going to get another little box right below it. And that little box is going to be a longer term trend. So now notice what I'm pointing out to you, that we have here oil sector that is not in red, but it's actually longer term in green. That is very useful. We also have a utilities that are in a small amount of time down, but in a longer term trend, they are actually up. Now, this is very important because when we do this automated evaluation, right? When we do this automated evaluation, I can see for instance, that we have a basic materials right here. I'm gonna kind of just circle this so it would be obvious to you. Somewhat still in blue, but going down. We have a healthcare going down. So because it's going down, probably I won't consider any trade on that particular product. I will be entertaining possibility of the oil and of course the utilities. So what is the recap? Well, the recap is that best of these worst are actually the basic materials, the utilities, and the oil sectors, right? So what I'm going to do right now, I'm going to just take a snapshot of the utilities, and I'm going to put the utilities into this document that I'm going to share with you, so you would recognize that in the future when you're looking at something, you want to be early on in a game when a longer term trend is still up, but there's a temporary pullback. So what you want to look from now on when you start this whole thing from a beginning. So let's say like a few months from now, you're saying like, okay, environment has changed. I want to do this on my own. You click the button that says the groups. By the default setting, the groups is going to show you only what is happening, as I pointed out to you, over the last 10 days, which is really just for swing trading, right? But if you add the long term, you are looking for the best looking in the worst possible environment, and that would be the utilities. So within the utilities, you can double click on it and you're going to get breakdown into what else exists into utilities. So now notice over here we have a still in orange the description that I'm looking at the US stock market, specifically utilities, but utilities can be broken down into electric utilities, and it can be broken down into multi-utilities, and it can be broken down into water utilities. Now I'm going to just pick one of them, and that would be the electric utilities. So basically, when I double click on electric utilities, I'm going to get a lot of choices here. So what I want now to point out to you that this is my logic when I'm searching for a candidate using this automated thing. So in my opinion, in order for me to do this, I really want to see that which candidate would be here the best looking candidate that would be moving up. So one more time, like I just want to point out to you that we have now utilities that are down, but the longer term is up, right? I want to place the trades, but I want to place the trades in the utilities, specifically in the first of the subgroups of the utilities, which is electric. And I want to be blue on the top and the blue below. That's mean whatever the stock that I pick within that group, it cannot be red and blue. It needs to be blue and blue. Okay, I know that's kind of like overkilling it, but I'm repeating these steps because I want you to be independent and to use this platform and to actually know how to do it. So one more time, I'm here under the US sectors. I'm looking at the 10 days. I'm adding the long term. I have concluded that all these are not looking good. I'll come back later on to the oil because oil is separate group altogether, and I'm picking up the utilities. I double click on it. I got the three choices. Obviously, I'm not going to start with the water utilities because they're already going down. I don't want to even go into multi-utilities. I just want to get into the electrical utilities. So now that I'm in electrical utilities, I want a blue on the top and blue on the bottom. So the first one that comes very close to it is this one that I'm going to still and I'm going to use the word discriminate, meaning I'm not going to select this particular example because this is not strong enough. So I need to go lower to see if there is a candidate that it's looking better than the one that I have on the top. So I'm looking here still. I don't have a blue on the top. I don't have a blue on the top. I don't have a blue on the top. I'm going down over here. I'm seeing a little bit of better situation, but I still need to go lower till I find something that is looking good. So I'm scrolling it down, and I'm looking at the candidate that is blue on the top and blue on the bottom. Blue on the top and blue on the bottom. And I have found a candidate, and that is the NRG, energy. So NRG is an energy candidate, and I'm going to now look at the energy candidate to place a trade. So just one second, I click on the wrong thing here. I just want to make sure that I have this copied so you're following me. So now that I go in the NRG that has a top blue and bottom blue, I can get into the specific chart on it and entertain the possibility if I'm going to go directional on it. So let me just enlarge this and type in the NRG on a daily. NRG on the daily. Okay, so I have a percentage which is a 55.71%, right? So what I want to do next, I want to go on the option chain. I want to go on the option chain, and I want to now consider, before placing the trades, following thing. NRG, as you can see right here, it has a number about the 55%, which means we have a permission to go directional, right? We know we should be bullish on it, but I want to look on the option chain, specifically on open interest and volume, to find the most liquid one. And then I'll come back when I see the footprint of the institution to figure out where is that level on the chart. So I'm checking the chart after I check the actually option chain. So I'm checking the chart after I check the option chain. So now I'm using a different tool. and this tool is chain, right? So I'm pulling up here option chain for NRG, and I'm going to select the expiration that it's going to be just a June. Regular June 17 is what I'm actually selecting. So not the July, but the June 17. So there are many of these little boxes that I can look at, but there should be one area that our eyes should automatically go to, and that would be an open interest and a volume. So to kind of help to focus better on that, what I'm going to do now, I'm going to use a rectangle here to encapsulate open interest and also a volume. So open interest and a volume is what I want to use here. So when I go down over here and I observe that obviously the volume is very low today because we've been open only a few hours, and none of these are actually in 3 digits, then I can actually say, let's not look at the volume, let's look at the orders that are open but they need to be exited. So these orders that are open but need to be exited, they're called open interest. So out of the open interest that I have here, and out of the different strike prices that I'm looking right here, there's supposed to be at least few of them that are poking our eyes. And few of them that should be poking our eyes is this 45 call that has 4 digits of the activity. That's mean 8,900 and what is that? 8 contracts traded. Similarly, 45 put has the triple digits right here, and it also has the triple digits all the way down there, all the way down there. So that's the 42, 43 has the triple digits on the put side, and 45. So what is happening right now in my mind, I'm already kind of coming up with the idea what I could do. So to kind of expedite this thing, I'm gonna type in what I have in mind. I'm gonna check the 45 level on the chart, and if it works out, then I'm going to consider buying the June. So plus sign means buying the June 45 call. Okay. And financing it with the bull put, but the bull put is going to involve selling to open 45 put, and maybe buying to open either, and I think we looked at the 42 or a 43. The only difference between this is the width of the spread. So between the 45 to 42, it would be $3. If I make it tighter into $2, then I'm going to be using the 45 and 43. But the goal is that whatever this thing costs, so let's say if this thing costs me an X amount, I want this to give me a credit of that same X amount. That's my logic behind it. So if that is good, feel free to type in the chat box that you're following this. So I'm going to repeat it. So again, I looked at the option chain to find where the institutions are. I couldn't necessarily use the volume, but I used the liquidity of the option chain, and now I'm going to check the chart. So I'm moving on. I'm getting rid of this, because I would rather repeat these steps than lose you present in it. So I'm looking, where is the level 45? So obviously level 45 is right here. If I would even change this a little bit to the weekly to get the bigger picture, I'm seeing this is just about ready to break out of this huge consolidation that has been taking place in terms of the months. And I really mean months, because since the October of the last year, till just about now, the NRG has been going sideways, and now it's just about ready to break to the upside. So this whole consolidation that took place since October, November till this year, it's just about ready to break up. So I would like to place the trade in such a way that when this thing breaks out of it, I know currently we're a little bit pulling back, right? That it has the potential, it has that oomph, that strength to go up. So one more time, I'm opening option chain. I'm selecting the June 45 call that currently has a value of the $1.97. So now I want to edit the spread. So when I click edit the spread, I'm acting two option legs. Two option legs that I'm acting are no longer going to be just a buying, because one of them is going to be selling. So I'm going to be selling the 45, not the call, but the put. And I know that down here we have observed quite a bit of activity. And let's pick the 43 because it has a bigger open interest. The 43 on the put side has an open interest. I'm going to just use yellow. I think yellow looks a little bit cleaner here than the blue. So 233 contracts of the open interest that haven't been closed on the 43. So I'm going to now buy the 43 put. In a moment, I'm going to change this. And that 43 put with the 45 put is going to risk about $200. Hopefully, I'm going to get enough to pay for this total of the $1.97. So let's just alter this thing to 43 and to the put. So when I have that done at 43 in the put, I'm going to click OK. And the pricing here comes up that I still need to pay a little bit of money. So if that's the case, then I'm going to actually drop it down to the 42 because I want to bring this to basically no cost to me. So I'm bringing it up to 42. I click again OK, and it's still costing me something. That's not quite what I had in mind, but let's see if I can do that logging into Thinkorswim platform and just quickly placing the trades individually. So what I want to do right now, as soon as Thinkorswim loads up here, I want to break down this trade into two pieces, right? So the first piece is going to be just a simple long call, okay? So my long call is a debit trade. And then I'm going to have a trade that is a credit trade. And this credit trade is called bull put. Okay, so let me just log in here. Just give me a second. I'm going to pull up the Thinkorswim just to execute this separately. And we're going to then place this together. So one more time. We're looking at the June. We're looking at the 45 call. And we are considering financing this. So let's type in the ticker. So ticker for that particular trade is NRG. So NRG. Okay, so that's energy sector. I'm looking at the 45. 45 is currently at the money. There's the same open interest that we saw on the top. And it's going for $2.05. So I'm going to put the mouse right there on the ask. I'm going to single right click and I'm going to just select the one contract. So I have a one contract of the June 45 call, and I'm going to try to get filled at 205. So I'm going to place it and see if I'm going to get filled. If this was a real trade, then this 19 would jump to 20 to get filled. While this is waiting to be filled, and by the way, I did push the market now to 205, 215. If I go ahead and cancel this, if I go ahead here and cancel this, then this is supposed to go back to the whatever the spread was before. Okay, so now it says, oh, price supposed to be at 210. 210. Okay, so if I know that I would need about the 210, then the question becomes, can I get from this side 210? You see, now it's changed to 210 and 215. Now again, it depends what the price action is doing here. So I'm going to place this one more time. I'm going to give them 210, see if I'm going to get filled. And while I'm waiting for this thing to fill me at 210, okay, there it is. Now it filled me at 210. I want to get the financing of the 45 call, which right now gives me only $1.45. So I will probably not be able to get the whole thing financed, because even if I get the entire $1.45, yeah, I'm seeing here more activity at the 40. So then maybe I can do the 40 and 45. Let's now type in a document what I'm doing here. So you're kind of following what I'm doing. So we know that we bought long June 45 call for 210. That much we know. Okay. So we got a $2.10 of the debit. Okay. I will be now selling to open, and probably I'll have to do about 2 of these June 45 puts, and then I would need to buy also 2 of the June whatever, we'll figure out which one, puts to get that same kind of credit, So let's now just do this. 45 with 40 would bring me how much? Selling vertical 45 and 40. 45 and 40. $1.20. Okay, let's see if I can get filled for $1.20. It's working. If it's not giving it to me, I'm gonna drop it down to still not doing it. Let's bring it down to $1.15, and I'm gonna make this into 2 of them. $1.15, 2 of them. Okay, so I got $1.15 for it. Okay, so and I did the $5 spread. So what I did here, I put in the 40 put, and I was able to get $1.15, but in reality, I actually get up 2 times $1.15. So I have what I could call like a free trade, but it's not really free trade. It's a trade that risks $1,000. Why do I know that this risks $1,000? Well, the spread is a 500 times 2, and then minus that whole thing. And that's why I go back on the top, and I want to now create this separately. So what I'm going to do right now, I'm going to edit the spread, and I'm going to just get rid of this particular leg, which is for a long call, and I'm going to stick here only to the long put. Okay, so this long put for a single unit, it's showing me that I got the $1.20, when in reality that's not the case. I actually got the $1.15. To get the exact price on it, let me just look at here. What did I got filled? $1.50 and $1.35. So what I'm doing here when I'm editing the spread, I'm typing here filled price. The one that I sold for $1.50. The one that I bought for 35 cents. So for 35 cents. So now when I click OK, so that says $1.15. So now I have this as a part of the risk graph. So here's my risk graph showing that most that I'm risking on this particular unit is 115. So I'm gonna now just float this, put it away, and do the long call. So when I do the long call, it's the same concept, right? So I had that 45 that I ended up buying for $2.10, right? So this is a nice way of actually knowing how to do this trade. So we have a edit spread. I'm going to change this to 2. So I have 2 of these, and now my long leg, the one that I'm actually buying, is 1 contract of the 145 call. So here's the 45 call, and I got that for $2.10. So now when I click OK, And when I go over here to show the risk graph, this risk graph actually points out to us that I still have a credit of the $20. Now, how much money can we make? Well, in ideal universe, I would like to see that this particular trade expires worthless. Okay, so my goal is to see NR NRG at, let's say, 50. So if it's at 50, how much is then my bull put spread worth? Well, if the NRG is at 50, then the bull put spread is worth 0. So that's mean this $115 that I took in, or $230, is completely free. This $1,000 that I have as a risk, it's gonna eventually get released. Now, if you're at 50, then the question becomes your commanding unit, your main unit, your $45 call is then worth 5 points because it's a $5 in the money. But out of that $5 in the money, we have actually ended up paying $2.10. So then how much did we really make? We made it $2.90. Now think about it. If you made it $2.90 and something that we only risked, well, it's actually $1,000 that we had on the risk. And let me just explain it why it's $1,000. When you look at right here of the trade that we have here, so let me just show you here, account statement, right? So NRG is a position that I have open that I just placed. The fact that I paid $210, it's almost irrelevant, because really all that matters to the broker is how much of the money can I legally tie up from you. And buying power effect that they're taking up, it's $1,000. And the reason why it's $1,000, it's not because of my call that I already paid for, but because of the 2 contracts of the bull put. So these 2 contracts times the $500 spread is what it causes that. Of course, everything that I'm doing right now, I'm gonna later on present to you in a usual spot at tradingwithufos.com/Josip. Here's a live session notes from whatever the session we had there. So I'm going to post this. But what I'm teaching right now is the whole logic of how to use the automated way of sector evaluation. So you don't need to do this manually. You can do this in the way I'm showing to you right now. So what I like to do now, I would like to go back and look at the oil, because oil looks good too. So what I'm doing right now, I'm actually going back to the section where I can again open up the group and go through the group one more time and focus on the oil. So if I select the oil and then I look at the different oil producers. So oil producers. So we have here exploration, integration, oil and gas production. So you load it up and you want to have on the top and on the bottom green. And I have one that I really like, and that's a Valero. Valero is right here, and that's the one that we're going to entertain. So the second example that I'm doing right now through the sector evaluation automatically is that I noticed that the best of the best is actually oil, and I have selected the Valero as the next candidate that I'm going to trade. And I want to now look, is a Valero giving me ability to trade because it's directional? So I'm pulling up Valero, and just like before, I had the number here at the NRG that was greater than 50. I want to see what it's going to be for Valero. So Valero, 53%. So does that pass or does it not? I'm going to take a sip of water and wait for your response to go directionally or to go non-directionally. Yes, thank you for interacting with me. It passes our directional bias. Now the question becomes, do you want to go short or do you want to go long? Well, let's just look at the chart one more time. In the current environment, with everything that is happening geopolitically, the trend is up, and now with the prices of oil going through the roof, this is up, but we have a minor pullback here. And on this pullback, we have created what kind of highs? We have a high and a higher high, and we have a low and we have a higher low, and now we're breaking out of this downtrend and we have a potential to go up. So another good way to position the trade would be to use this additional thing that I love to use on the top, and that is simply that you project whatever the target you think is going to be. So if I think the target is going to break through the 130 and go even higher, I can just put the mouse right there, whatever my target is, single right click, and then when I single right click, I go down to where it says ascend to, and now it's now looking up the targets in the area of the 132. So when this thing looks up the targets at the 132, and I'm going to just hide this risk graph, and I'm going to be looking at the different bull call spreads, I like the one that it says right here, 130 and 135. 130 and 135. This is the one that I actually like very much. So these are the strike prices that I'm actually interested in trading on a Valero, because Valero, as of now, has this high percentage that it's directional. So one more time, not to lose anybody, what I'm doing here, I'm going to start again explaining that we're still doing the sector evaluation. The second example is not a utilities. It's not a utility, it's actually oil. Okay, so we're now looking at the second example, which is oil. And out of the oil producers, we found Valero that is more than 50%. We can go directionally. Both of these are green, just like I pointed out to you before when we did earlier. And then what is the next thing? Look at the option chain, look at the volume, find the most liquid one, and tend to check the chart. So I know where my target is, but I also need to have a desire to figure out how can I finance that. So in order for me to finance that, so I'm going to be looking at financing this. And I'm not thinking, I don't think I'm going to pick the July. I'm going to pick the June 135, 130 call. This is what I'm gonna do. Okay, so just to save the time from typing, I already have it here typed up. We don't know what that debit is gonna be, but whatever that debit is gonna be, it's gonna be financed by some put structure, and that put structure needs to be revealed to me through the open interest of the puts. So what I'm doing right now, I'm going to just tuck this away. I no longer need it. I already cut out the most important piece of information, which is that this strike price is 130, 135. So what I need right now, and I'll come back to the chart in a moment, but I'll need to go to the chain, and I'm going to again select the chain for June, not for July. I know they picked for me July, but July is like so far away. I want to look at the June, and I want to look at the open interest right here. So this is where my eyes should be in terms of looking at the open interest. Looking at the open interest of the put side. So we're talking about right here, the puts. We're talking about puts, and these are the out of the money puts right here. Out of the money puts are right here. So I'm considering maybe doing the 120 and a 115 put spread. That's a $5 put spread. and that should pay me enough to finance purchasing of this, and let me change the maybe color here to yellow, to this call spread right here. I want to finance the 130 and 135 call spread by actually doing the put spread right here. So I'm going to start with the put spread first. So let me now type again what my intention is. What my intention is. Again, we're going to have two things at the same time. Two things happening at the same time. We're going to have a bull call, and I should specify this is out of the money bull call, and we're going to have a bull put, and that's also going to be out of the money. Specifically, the bull call is going to be this June 135, 130, and this bull put is also going to be June, but it's going to be selling the 120 and buying the 115 put, and that is going to then give me a credit. Okay, having said that, let's jump in. We have about 12 minutes left. And how do we do this? Well, first of all, let's find out how much the long call costs. So I'm going to just edit the spread right here. I'm going to add one more option leg. I'm going to make sure that everything is for June 17. I'm buying the 130 that is out of the money, and I'm selling the 135, which is my target, and that whole thing's supposed to cost me $1.27. So to recap this thing, this debit is going to be $1.27. I need to get the credit on that, in my opinion, greater than $1.27. Whatever greater I get, that's all bonus. That's all bonus. So how do we do this? Well, now I'm going to go here, edit spread again. I'm going to add two legs. So now when I add the two legs, by default setting, they say sell, but that means nothing, because I'm going to be changing and I'm going to be saying what I really want to do. So I'm going to be buying the 115, and that's going to be 115 put. So I'm locating here 115 put, and I'm selecting the 120 put. So reason why I'm selecting the 120 put is because I had a huge liquidity on it. I had a huge liquidity on it. And when I do that net, I actually get the 43 cents credit. That's all bonus. That's all wonderful. Now notice over here, this is highlighted. I'm buying the call for $3.40. I'm selling the 134 call for $1.91. That's the difference that I need to finance, and now I'm bringing $480, which I would love to keep, but then I have an obligation, then I would need to tie up too much money to this 120 obligation to buy strike price of the put. Therefore, I'm getting the protection of the 115. So having said that, let's now do this. So the ticker is Valero. Valero Energy, June. I want to get the financing in first. 120, 115. Sell, vertical. Bring in $1.68 for one contract, fire it in. I got 170, that's wonderful. I'm not going to take a break now. I'm going to right away jump into other ones. I have $1.70 now to spend. And that $1.70 that I'm spending for buying the 130 and 135. It would be good if they can fill me at 130, which I doubt they will, but I'll try it. 1 Mississippi, 2 Mississippi, 3 Mississippi. No, they're not giving it to me. Nope. Now they want more. So after about 2 minutes waiting, I usually give them a penny higher. and see if they're going to fill me. So cancel, you wait. Now, of course, I'm in a simulated. In the real account, you should wait more than that. But you see what the logic is here. I already took in that credit. So my Valero right now, it says, oh, it's a 631. Well, why? Okay, let me just cancel this. It's not going to be 631. Now it's only what? 500. And the reason why it's 500, because Valero has a spread of the $5 and it's been done only once, right? But if I now go ahead and fire the trade in, then that number from a 500 is going to jump to whatever amount. Look how much they want now. I'm going to give you 132. They're not taking it. Yeah, I'm going to do the thing that Jose did yesterday. He said, don't ever do that, but I'll do it for the sake of the time. He changes to the market order. In a paper, you can do anything you want, So here it is. I got filled at the 138. So now that I got filled at the 138, I have these numbers that are actually clear to me. And one of the ways how I can figure out what is going on is that I just reduce this to the bare things that I really need. So I know on the Valero, I did the 120 for $4.80, and I did the 115 for $3.10, and the top part I did for $3.50, and other one was $2.12. Okay, so let's now enter these numbers and then I can take a snapshot. So when I go over here where it says edit spread, now I have those numbers, right? So 130 is the one that I actually got filled at $3.50. This one, which is the 135, I got filled for $2.12. The put 115, I actually got filled for $3.10, and 120, I need to give them some of the money back because I have gotten such a rich premium of the $4.80. So now when I click OK, it says I'm actually ahead of the game by the $32. So what I'm going to do right now, I'm going to click the risk graph, and I'm going to show you how this looks on the risk graph. So on the risk graph, it says the most that you can make on this particular trade, if his enchilada is a 32. Let me just now take a snapshot of this piece, and I'll put it in here and kind of explain it in a moment. What does that really mean? What does this really mean? So let me now just break this thing down. So 135 call, which is the one that we bought to open. So we actually sold to open 135 at $2.12. Then we bought to open one contract at 120 for $3.10, and that was the debit. That was the debit that we are being financing, right? So this was a 138 debit. So this was 138 debit, and this whole thing we did for a credit of the 170. So we got the nice credit of the 170. So when you look at that credit of the 170 and you subtract the difference, there you go. So that's where you get the 32. So 170 minus 138 gives you credit. Now let's now talk about the outcome. So what is the outcome? Let's say Valero hits the 135. If the Valero hits the 135, I need to first ask, what is going to happen with this bull spread? Well, this bull spread is going to be worthless. So this whole $500 that I had is going to go down to zero. $5. Where do I see $5? Well, my 120 and my 115. That represents the $5. So that is going to then go to zero, because I have no longer obligation to buy at 120 something that is trading at 135. So if something is trading at 135, then the question becomes, how much is my call spread worth if we are at 135? Well, the the difference of the spread is what? $5. So the $5 minus $1.38, that would be $3.62. So my maximum profit here would be $3.62. And that's a $3.62 on an investment over here that you're looking of the right now, about the $500 that is being held as part of the margin or the maintenance right here on a Valero. $500. Why did that other 138 disappear? Because they took it and now it's theirs. So on a $500 investment, I'm making that much. So I don't like that the price has closed above the previous point high. Joe says, okay, let me now see this on a Valero where this whole thing is. Okay, so I'm going to just float this, move it away, and go back to my chart to see how is the chart looking here. So on a Valero, Joe, you're talking about Valero or the previous example? Feel free to type it in. Between these two trades, I personally like Valero way better, because it has a potential. We're buying it at the pullback. It's very different than NRG trade. NRG trade, I'm actually buying it at what is called momentum breakout, on a possibility of us piercing and going higher. So this one looks good, but the NRG, um, energy trade, and if I go on a weekly, you would get a little bit better kind of. Um, I mean, it would be nice if it closes above, but as of now, if you want to keep this on a radar and maybe wait till it goes above, but then you might be regretting, because once when this thing breaks, I wouldn't be surprised if it rallies even higher. However, if somebody puts a gun to my head and said I could choose one of the two trades, obviously I don't need to even say it. It would be this trade, Valero. So, recap of everything that we have done today, starting with the beginning. At the beginning, we have looked at the big picture and we observe what the market is doing. Market is in the danger of actually even losing all the gains from 2021, and on a QQQ we already lost that. I have done the sector manual evaluation and I have shown to you there's a somewhat discrepancy. Some of them are already showing the higher lows, such as financial, communication, healthcare, and tech. But some of the sectors, such as industrial and cyclicals, when the consumer it's kind of fed up and tightens up the belt, or doesn't drive too much, or doesn't go and spend out on the fancy dinners and restaurants, that's already a sign of trouble. When industrials are struggling, that means there's inventory sitting that is unsold. That's already a trouble. So these two sectors are already showing the slowdown, while these sectors, as of now, are still somewhat attempting to go higher. Then I said, okay, that's a manual evaluation. It really takes a long time to do it. You are so much better off if you do auto evaluation. And one more time, how do we do auto evaluation? We simply click the one of the most underutilized tabs on the Trade Active Option Planner, which is a tab for a group. Once when you get there, please don't get intimidated. Please don't say this doesn't tell me anything, because everything is down. You want to look at it in comparison to something. And what are you comparing it to? To the long term. Of course, you can now play with this. I want to see the groups that are up. In that case, it would right away cut out all the nonsense, right? So just be aware of it, that when you pick whatever you pick, like we picked the oil for a Valero, right? Then you double click on that and then you get a lot of examples. Now, one of my standards that I was saying to you, you need to have a top one in the blue and a bottom one in the blue. All this other one you can just visually, and correct word is to discriminate. So I look at the DK here and I look at the Valero and then I pick at the Valero. And as always, my logic was to place the debit trade and to finance it with the credit trade. Thank you, Joe. I like Valero too. So once again, please stay hedged. This is very volatile market, and I'll see you on Tuesday, and we'll see on Tuesday and evaluate how well these trades have worked. I really enjoy teaching you this. Please use this underutilized group tab for future references. Thank you once again. Stay hedged, and bye.